Audit Planning and Framework Part 3. Audit Procedures. Audit procedures are the processes and technique that auditors perform to obtain audit evidences which enable them to make conclusion on the set audit objective and express their opinion. Also sometimes we call audit procedures as audit program. Auditors design audit procedures to detect all kind of risks that they identified and ensuring that the required audit evidence are obtained sufficiently and appropriately. 5 audit procedures that normally uses by auditors to obtain audit evidence, which are analytical review, inquiry, observation, inspection and recalculation. Test of controls. Test of controls is an audit procedure to test the effectiveness of a control used by a client entity to prevent or detect material misstatements. Auditors may choose to rely upon a client's system of controls as part of their auditing activities. However, if the test reveals that controls are weak, the auditors will enhance their use of substantive testing, which usually increases the cost of an audit. Test of controls can be classified generally as following 3: performance, observation and inspection. If the inspection approach is used, a test of controls is typically conducted for a sample of documents related to transactions that occurred throughout the year. If the auditors encounter an error in the test of controls, they will expand the sample size and conduct further testing. Let's talk about substantive procedures. Substantive procedures is a procedures to detect the misstatement in the statement, in order to reduce the detection risk, and its speciality is to detect the monetary misstatement in the transaction. In addition, it can be as an evidence if there is materially misstatement occurred. How substantive procedure is conducted. It is conducted by auditor. It's being conducted using 3 different type, which is firstly is analytic procedures, secondly is test of details of classes of transactions, and thirdly is test of details of account balances and disclosures. What are the functions of those procedures? Analytical review procedures is a comparison of recorded amounts to expectations developed by auditor. It also involves the study and comparison of relationships between accounting data and related information. Next, test of details of classes of transactions. It is a transaction test for error and fraud in individual transactions. Lastly, test of detail of account balances and disclosures. It is the ending general ledger balance for a statement of financial position item. Let's move on to audit evidence. Audit evidence is made up of underlying accounting data and corroborating information. Underlying accounting data includes the client's journals, general and subsidiary ledgers and various other records such as worksheets, which all support cost allocations and bank reconciliations. All these records directly support the financial report assertions, which may be either general or specific. Conclusion. In conclusion, audit evidence is important because it is the duty of an auditor to express his independent opinion on the financial statement furnished to him. The data produced by the accounting system alone, for example journals, ledger, manual, worksheets, are not sufficient to base his opinion. The auditor should, therefore, gather all valid evidences and verify them. The evidence should also be complete and competent to give an idea about the fairness of the accounting data. Audit evidence has assumed much importance in the company audits all over the world. Not only the shareholders but also even others can place reliance on the audited financial statement. Bank and other financial institutions have recognized the auditor's opinion as true and fair. Therefore, to be on the safer side, the auditor should obtain sufficient evidence. This will certainly give him a confidence sufficient enough to enable him to be convinced of the basic truth or falsity of the financial data. Criteria of good evidence. The relevance of audit evidence can be decided by, firstly, the pattern of the audit procedure used to examine the assertion or control, whether it is designed to examine the assertion or control directly or examine for understatement or overstatement. Secondly, the timing of the audit procedure used to examine the assertion or control. The relevance of evidence rely on the nature and source of the evidence and the situation under which it is acquired. For example, evidence acquired from a well-informed source that is independent of the company is more reliable than evidence acquired from internal company sources. Sufficient appropriate audit evidence. Sufficiency is the measure of the quantity of audit evidence. The quantity of audit evidence required is pretentious by the following: risk of material misstatement or the risk linked with the control, quality of the audit evidence is obtained. Persuasiveness of audit evidence. Audit evidence is any information to decide if the audited information is expressed in accordance with established standard. Two determinants of persuasiveness of evidence are competence and sufficiency. Competence is the degree to which evidence can be think as trustworthy. Sufficiency is total of evidence which sufficient to set up a sensible opinion. Several factors affecting persuasiveness of audit evidence are competence of evidence, relevance of the audit objective, timeliness and sufficiency of evidence. Now let us move to the types of audit evidence. There are 7 types of audit evidence. 1. Physical examination. 2. Observation. 3. Documentation. 4. Confirmation. 5. Inquiries of client. 6. Analytical procedures. 7. Reperformance. Firstly, I will explain on physical examination. It is the inspection or count of a tangible asset by an auditor. It is most often associated with inventory and cash, but is also applicable to the verification of securities, notes receivable and tangible fixed assets. Secondly, observation. It is the use of the senses to assess clients' activities. Observation consists of looking at a process or procedure being performed by others. Observation is rarely sufficiently by itself because of the risk of someone changing their behavior because of the auditor's presence. Thirdly, documentation. It is the auditor's inspection of the client's documents and records to substantiate the information that is, or should be, included in the financial statements. The documents can be internal, which means it has been prepared or used within the client's organization and is retained without going to an outside party. Or it can be external, where it has been handled by someone outside the client's organization who is a party to the transaction being documented, which is either currently held by the client or readily accessible. Pseudastads. Fourth, confirmation. It came from independent third party who assures the accuracy of the information requested by the auditor. The receipt can be in the form of written or oral response. We know it's related to accounts payable and accounts receivable are conducted. Confirmations are most likely to occur. One of the types of confirmation is positive confirmation. The third party is required to respond to the auditors regardless whether the amount is correct or incorrect. Next, negative confirmation. The client doesn't have to contact the auditor to confirm the information and respond only if the amount stated is incorrect. Fifth, inquiries of clients. It is obtaining of written or oral information from the client in response to questions from the auditor. Since it is not from an independent source, it cannot be regarded as conclusive and may be biased in the client's favor. Next is analytical procedures. This occurs when the auditor made comparisons and relationship form the information to determine or calculate other information related to the audit. Lastly, reperformance. It refers to rechecking of the sampling work done by the client. It includes the computations and transfers of information. Rechecking of computations is the testing of mathematical accuracy, while rechecking of transfer of information is to see if the information is recorded consistently in the accounting records. Thank you for watching.